Hi everyone, it's Brett here from Metropole. Well, who will buy my property? That's the question you should be asking yourself if you want to create longer term sustainable wealth through property investing. We've just seen NAB and Westpac come out in the last few days and revise their forecast for our property markets moving forward. Although growth will likely continue for the next 12 months or so, they're foreseeing a correction in 2023. You see, it's easy to look like a guru when an average property is making up to $1,000 each week, but what happens when the tide turns? What happens when this cycle is over? When demand drops, home buyers dry up, and investors go back into their shells? Those are the times that make or break your property portfolio. It will be the underlying demand for your property that dictates what happens next. So here are my thoughts on the good, the bad, and the ugly. So who will buy my property? Well, the good side of things is you want to make sure you're appealing to homeowners, owner-occupiers. We always target a high percentage of owner-occupiers. Owner-occupiers are longer-term thinkers, and ups and downs, they're not thinking about the market, they're thinking about their home. I know homeowners would rather eat Maggi noodles for 6 months than sell their property and keep a roof over their family's head, and that's incredibly important. The perfect idea is to have a good bunch of owner-occupiers who also have good rising incomes, because they're generally going to pay more for property, they overcapitalise, and if you've got an investment in that location, you can really benefit from that. So the trump card is buying owner-occupiers, but also with the additional benefit of having those weekly family incomes. There's so much more resilience in those property markets, and you take out the spikes and peaks of each market. The bad, well, the bad is probably focusing on more in short term and focusing on more investor dominated markets. Investors are very short term thinkers. They think nothing is selling their house. They buy with their calculator. They're using numbers. They're not buying with emotion. We've seen those types of things happen in mining downturns when the market turns, all the investors drop out and prices are a free for all. And that's certainly, a worst case scenario, but we'll see that in our markets moving forward as well. When demand dries up, who's going to be there? Properties like inner city apartments, house and land packages on the outskirts and dual occupancy, when tenants dry up and buyers dry up, they're really going to struggle, because the other thing is the supply and demand ratios aren't quite in the right order. There's a huge abundance of apartments or land in those locations, and demand is really going to drop. Staying on the investor dominated theme, and this is where things could get really ugly. The secondary market, also understanding that aspect, and investors who are buying for depreciation benefits and yield, this is when they really come unstuck. Several years ago now, the government changed the rules and regulations a little bit around depreciation. You can only benefit from depreciation if you're buying a brand new property. So if you're reselling or buying a second-hand property, you can no longer benefit from tax and depreciation benefits, and that can be a huge issue in the resale market when there's a lack of demand anyway. Also, yield is generally the time you get found out, because generally yield is an example of low growth and higher risk to cover those kinds of offsets. So it's really important that you understand that, and you understand what the resale market is and who is going to buy your property. If you get it right, you buy in high owner occupied areas, you're going to ride those times out, you're going to recover significantly quicker as well. If you don't, and you buy in investor dominated markets with high supply and low demand, you could find yourself in trouble, and those other secondary type of properties could experience really hard times moving forward. That's my thoughts for today. Thanks for listening.